Hello, everyone, and welcome to Money 2020 in Amsterdam. My name is Joe Vezzani. I'm the co-founder and CEO of LunarCrush, and today I'm joined with Sergej Kunz, co-founder of 1inch. Sergej, how you doing, man?
Hi, thanks for the invitation. It's a pleasure to be here.
Yeah, of course. How's the conference here been for you so far? Anything you see out there that's been interesting?
Everything's interesting here. So a lot of fintech startups, companies which you can easily plug into your products, like IBANs, credit cards, debit cards provider. A lot of fintech, a little bit of I would say Web3. It's cool. It's cool here.
I was talking about it with everyone this week because as I arrived here at the airport, at Schiphol Airport, I saw an advertisement for 1inch up on the screen. And coming from the United States, that's not something that normally I would be able to see. And I said, it was kind of funny because I said I felt like I was actually stepping into the future a little bit, landing at the airport, seeing what you guys are doing. And it was just exciting for me. So congrats on that. I know the brand has been out there for a while, and what you guys are doing is really cool. And so maybe you could just talk a little bit about, like, what is 1inch? What do you guys do?
So maybe before I start, regarding the advertising, is really nice.
Yeah.
Really nice work from my team, who is responsible for marketing around the globe. We will be we're happy to be very, very well presented in the US as well. But based on the current situation, it's kind of difficult. Yeah. We have different products like also self-custody wallet, which is kind of fully regulated, I would say, in terms of there's no regulations for self-custody wallets, and we can promote it very well. But anyway, it's kind of US situations right now a little bit hot, I would say. That's why, we are concentrating in those countries which give us our the feeling that we are safe in this country. Yeah. So regarding 1inch, 1inch is we call it network because we have built over the last 4 years since we started on a hackathon. It was just a hackathon idea. We have built a lot of products. We have built a self-custody wallet for iOS and Android. There are different teams who are developing it. We came with the first approach of the aggregation in one single transaction, fully atomically executing a trade among multiple liquidity sources, multiple DEXs. So, and nowadays we are doing more complex things like aggregating among not just liquidity sources on one market. We use multiple markets, so we have kind of really complex path from exchanging Ethereum to USDC by using DAI, USDT, WBTC market, and so on. It's kind of a very complex thing. And nowadays we introduced recently in December last year something like I call decentralized approach of Nasdaq. Yeah. Where the user just create an order, and this order is being executed highly in trustless manner, fully decentralized manner by professional market makers, and allowing the user to get most of their value of the trade. So we have teams who are building hardware wallets. So like replacement for Ledger, for example, we have seen this drama with the black box with what they introduced. What I was also telling everyone, take care if you're using Ledger. You don't know really, is it really randomly generated seed phrase, because they have kind of black box. That's why we came to the idea, why not to build a fully open source hardware wallet where the community can also participate, because community is very important, and no one should trust. Everyone should be able to verify. Right. It's kind of our principles which we follow. Also with the aggregation protocol, you can verify everything. In a wallet, you can verify any transaction which you sign. Yeah, there's a lot of things. That's why we are calling it 1inch Network. We are 180 people around the globe working as a core contributor on these different services, products, and kind of developing the future of finances. We from 1inch Labs, we are pushing forward with institutionals, we plan to introduce simple settlement for exchanging assets on blockchain by using DeFi technology for institutionals in fully compliant manner.
Yeah, and I know when 1inch came on the scene, it kind of changed the game with regards to kind of multi-routing and splitting trades, and that was it was extremely innovative when it came out. And I know you guys have gained a lot of market share when it comes to trading. How did it change a little bit in with FTX in November? We've everyone in our industry saying, okay, finally, like we get to move more decentralized. We get to go to the place that originally we wanted to go, and it's not kind of these larger centralized agencies pushing money around in a way that makes it, unfair, where, that was the whole point of kind of democratizing opportunity in crypto. And so what have you guys seen since, November, and, have the order books increased, more institutions finding interest in what's going on? It seems like potentially more self-custody hardware wallets. Is that more institutional focused? Is it retail focused? A little bit of both?
So what we have seen is huge volume on 1inch.
Yeah.
So we also in this USDC DPEG drama, we have seen like 4.5 billions of US dollars in 24 hours.
Wow.
Fully permissionless, trustless, executed through our protocols. It's really nice to see that people understand that it makes sense to not use not needed intermediates like centralized crypto exchanges for swaps. Yeah. So we see a lot of people downloading our 1inch wallet as well, installing it, using also with hardware wallet together. So we support Ledger, for example, as well. So yeah, this so grow also in terms of education of people. They understand now more that you shouldn't trust the central entity, which can be regulated, but at the end, behind centralized settlement and entity itself, they're humans. Humans make mistakes. And I like this Murphy law, which says if something can fail, it will fail. Yeah. And that's why it's better to use something what is more efficient, like settlement on the blockchain. We just interact with a program, not with humans. We can make mistakes or become greedy and start to gamble with your money, which you just gave him. Yeah. That's what I see regarding institutionals. Of course, there are some institutionals like Switzerland, for example, Signum Bank. They're expanding. They have really nice trading platform where you can just easily exchange your crypto to fiat and directly into your bank account. So you're in the bank, inside of the bank. It's really nice to see that more and more banks like introducing new tools which kind of improve the user experience in the crypto space.
And let's talk about the user experience in the effect of how do you think about being kind of a core contributor to the network? And you said there's 80 people or different entities, and there's probably people building on your API or interfacing directly with the protocol. It's like, how do you think about organizing and kind of like rallying the community when you're like, hey, we think that this adjustment needs to be changed, or hey, we need to go maybe find someone to help us build and contribute this piece of code to what we're building? How do you think about the brand and just rallying that community?
So we are 180 people. 180.
180.
Yeah, okay. It's actually a lot. It's sometimes nightmare. Well, so it's really sometimes nightmare. Also in the community, in the forum, there are a lot of proposals. We have people like teams like Stable Notes and Diplomats. They are helping us on forum with the community. Propose also by themselves some ideas. But sometimes it's really drama. So we had a proposal for NFT marketplace. So it was like aggregation of NFT marketplace and kind of own thing, similar to OpenSea, based on our protocols which we have. We have limit order protocol which support ERC20s, but also NFTs. So you can highly efficient sell, buy NFTs by using our limit order protocol. So we don't have a client for this yet. That's why someone came with this idea and asked, we would like to build this. And they said like, we need like $300,000-400,000 of US dollars to do that. They presented on team, presented the idea. And just before this proposal went for voting in the DAO, another team popped up and asked to build the same but cheaper. You just copy it, modify it a little bit. It's like we are smarter, we are younger, we are cheaper. And then no one did due diligence. No one really did a call with these guys and understood how professional are they. What understood, they are a consulting company, built some different things, but still, like, no one was thinking about that in the community. In this we call them delegates, like stable nodes, diplomats. No one was really looking into deeply, because normally you need also lawyers who looked at those persons who get money from the DAO. Are also like clean persons, not hackers with a hacking background, and I don't know, and not sitting in North Korea or something. Such things needs to be kind of implemented, and DAO thing is kind of really young. Like this is something experimental, I would say. It needs to be improved, and a lot of policies needs to be written. Not just at one inch. It's everywhere. I guess every project who has a DAO with a treasury needs kind of processes. Maybe someone who monitors, like I call it secretary, maybe who has no power in terms of saying someone you should do something, but has power in terms to claim, oh, this looks wrong. You should maybe verify and revalidate
in a way.
In terms of product development, we have teams coming with new ideas. We try to communicate with each other. Sometimes also nightmare. So one team have no idea about what the other team is doing, and maybe they can collaborate and do something together. Sometimes really terrible, but we try our best, and it works. It works. So
it sounds like a fast-growing startup, right? That's kind of what happens. It's growing pains. It's trying to figure out how to do this, but also figuring it out in a new atmosphere where there's voting and there's a DAO and there's $300,000 to $400,000 that could even be given out to go build something new. So it's kind of a combination of the old world, a little Web 2, where it's like, hey, we're going to put this proposal and everything up. We need to KYC these people, make sure, like you said, they're not hackers and everything else. But then how can a community vote and be all informed, right? If everyone needs to be voting, how to be informed? So you're kind of breaking new ground here.
There's also a huge question: what is the responsibility behind the DAO? That's why we plan to introduce. There's some thoughts in the teams. We plan to introduce something like DAO constitution, and it's like our own country, It's like you need a constitution, so everyone is aware for what is DAO responsible for. Like in our case, we have most of the things we have built are kind of admin-less, I would say. So there's no admin key to break something or to steal money or something. We try to build highly efficient things because of this Murphy law is something we can break. This will break. That's why we just build something that cannot just die or break.
It's also interesting to think about. You're still competing in a way, but as a group, against other startups or other businesses, right? And those, as a startup, one of the main things that you have, the reason that you are competitive is because you can move quickly, right? There's no reason on earth that Uber should be as successful as they are in a world that has all these massive car companies in mobility. It's like, how do they outcompete? It's because they can ship and they can move fast. And I think a lot of people don't realize in Web3, where you're not only having to move and try and move as quickly as possible to stay competitive in a marketplace where there is competition, but you're also, like you're saying, you're reforming a constitution even on top of everything else. And so I think that people sometimes don't appreciate the gravity of what is trying to be built and trying to be done in this space. And what you're saying around, hey, you can't be evil, right? Like, I think I forget, it was like Blockstack came up with that. It was like Google said, don't be evil. But it was, hey, you just can't be evil, right? And we live in this trustless environment, right? And so I think there's something that needs to be said for that, which is really cool. As you guys that's a large organization to be decentralized, to have a DAO, to be coming up with this, to have people voting, but then go implement those things and build a kick-ass product, which a lot of times doesn't come out of that.
Yeah, that's definitely not easy to kind of organize it, I would say. And there's more complexity when independent companies are coming, and like own teams, like Hardware Wallet we have right now, building own wallet. They ask, I guess today they publish a proposal to get some money to start the completion process to really order from the manufacturer the devices, so start to sell it, and they need some funds, and instead to go to VCs, they go to the DAO, ask for kind of long-term investment, because everyone would just get this hardware wallet and would see 1inch on that. So it's like free advertising actually for the DAO itself.
So where do you see this market going with the decentralized market and trading, and what are some of the utilities that you think are going to kind of be built on top of these markets? I mean, you've got Uniswap, right? Like, I know there's QuickSwap, in some of these pools, like Money20, you guys are doing routing on top of some of these pools. I mean, where do you see these different layers of technology? And you're talking about hardware wallet, we're talking about like an iOS and Android wallet, but where else are we going? Where's this kind of future? Like, where do you see the next 12 months in this space going?
So if you look on Uniswap, for example, they started with a liquidity protocol, right?
Yeah.
So they hadn't used the idea from the founder of Gnosis. They came actually a couple of years before with this idea and published it. Bankers started to implement that, but Hayden Adams, they did really nice thing. He implemented it highly efficient, and to the Ethereum pairs, like tokens to Ethereum, and it was kind of the breaking changer. And then we have seen like people start using Uniswap because it was the most efficient thing. And as soon as we introduced aggregation back in 2019 in New York, it was a hackathon, from Ethereum Global. As soon as we introduced the aggregation, people started to understand, okay, more efficient is not just to swap on one liquidity source on Uniswap, but to use an aggregator, because they give you the information where to buy, so you don't go to every aviation company and ask for like prices and quotes and then compare by yourself. You use the aggregator. So, and nowadays it's a really good question where we should go. So if you look on Uniswap, they started with liquidity protocol. They bought an NFT marketplace.
Right.
And I can tell you, based on analytics, no one is using an NFT marketplace.
I mean, Coinbase, NFT, dead. These are all dead.
It's kind of, like there's almost no traction anymore. OpenSea has still some traffic. And then Uniswap did what? They released the wallet, because I know why. We came to this already 2 years ago when we started to build our own wallet, because we understood you need to own the users.
Right.
The users needs to be yours. They need to use your product, so you can later, maybe one day, come to a good business model where you can live with. So not making maybe trillions of US dollars for your own pocket, but develop the technology, onboard more people, and be sustainable. And this is how we are building our things. We try to stay sustainable. Of course, we are burning. We raised 3 times. We are burning, but sustainable, I would say. So, and here, if you look again on Uniswap, from our point of view, they don't know how to earn, how to be sustainable, because they have actually liquidity protocol, which is used by some people directly, but most volume is coming from aggregators, integrations, and how they can earn. They cannot earn.
Can they just put a fee? Could they somehow put a fee? It's like, hey, if there's $40 million a day in liquidity coming through there, can they tack a couple basis points onto what's going on?
So they will lose to other people.
Gotcha.
So someone can. They had to do it from the beginning, because they had this business license. And actually, I can say the algorithm which is using for accounting inside of Uniswap v3 was invented by my co-founder Anton Bukov. He has built this algorithm for accounting of the liquidity for synthetics protocol, like 3 years ago, I guess, something like that. And they used this algorithm to build a new product. And they had to do this, enable the fees from the beginning, because they had this business license where no one was able to just fork it and roll out.
Right.
Nowadays, business license was expired. And nowadays, we have a lot of forks. And if Uniswap starts to charge fees, liquidity provider would go to somewhere else. So I'm personally also liquidity provider of Uniswap. I like Uniswap. In terms of efficiency, the ranges are really nice. Of course, there are some disadvantages. I was multiple times front run by providing liquidity. Someone just did a huge swap before I provided liquidity and did the reverse swap. And after I provided liquidity, so I was like 10 here or something.
Wow.
Yeah, I forgot to change the price impact. I set it to 30% or something. I'm not sure, because I was playing a little bit with shit tokens and provide some shit tokens as liquidity.
Trying to figure out how it works.
Because you have some volume, and you can actually earn when you are sitting really tight in the price range. So I personally earned some passive income from Uniswap, and
so what you're saying is that it's not that the consumer isn't like they're elastic. Like the consumer can probably take a couple more bips and they can pay that. What you're saying is that the liquidity providers themselves, they're who are making the 0.003%, or I think it's 30 basis points on those trades. You're saying that they will move somewhere else, knowing that there's now fees on top of there.
There are different pools. You have 1 bips pools, 5 bip pools,
right,
30
or exotic pairs.
I personally like 1% pools because there's less abuse, less attackers who swap before you and swap after you by providing liquidity, and also on trades. A lot of liquidity provider also lose money because someone just do this JIT, like just in time liquidity providing and removing after the swap.
Right.
There are some disadvantages of this protocol, and actually Uniswap could, instead of publishing a new wallet, they could just make a new version of Uniswap which solves this problem, but somehow they don't do that. Yeah.
And we can maybe get a little bit more technical, because I don't get to run across folks that are probably as into like liquidity provision as you are, but also, I think it's, what you kind of saw in like DeFi summer going back a couple of years was, hey, how do some of these decentralized protocols kind of start getting more people to apply liquidity? You can kind of create larger markets. There's more things you can do. There's different DeFi products that can be built off of that. It seemed like there was like APY that would be provided, whether it was in a DAO would vote in, and there's a certain amount of tokens that you could use. And when the market started to pull back, a lot of people lost a lot of money also through like the devaluing of those currencies, but also in permanent loss. And like where do you see innovations around? Like a lot of people are saying like, man, I'm not going to apply. A consumer is like not going to apply liquidity to any of these pools. They're like, well, I'm also exposed to a permanent loss of what's going on. I mean, is some of this stuff being figured out?
I guess this is also a lot of about risks as well. How risky are you? So, for example, last time Pancake guys called me and asked to move some liquidity to Pancake, and I told them I will not do that. Also, if I get the Pancake token as kind of to increase the APY, because there's problem of kind of security. There are security concerns. If they change the code, potentially they will audit with 2 security audit companies, but at the end potentially someone hack it and I lose my money, 100K which I earned hardly really.
Right.
And that's why I guess right now we see more people sitting in Uniswap because they have kind of their safety feeling, because it was not hacked, it's good kind of. But disadvantage, of course, you have limited APY, and it depends on you how good you manage your position. We have still this kind of incentive programs. The Gear protocol, for example, together with Curve, you can earn 30% APY right now by providing Gearbox token to Ethereum in a Curve pool. You get also a little bit from Curve, something like that. But I don't like this approach at all in terms of this is just printing money, distributing among people. It's like inflation, yeah. And which benefits do you get from this? Also as project, which benefits do the projects have if you have kind of a buy wall and sell wall, kind of there's no advantages from our point of view. And this DeFi summer was more about pump and dump, I would say.
Yeah.
People made a lot of money. So I earn token, it jumped to the moon and back, and a lot of people lost a lot of money from OpenIO. And some of the people earned a lot of money. So it's actually like money redistribution, and I call it maybe a little bit a Ponzi.
Yeah, a little bit. And maybe we could talk a little bit about what's kind of happened and transpired in the last couple of days. You sure you've been watching a little bit with Binance and Coinbase. In the US, like I was kind of talking about in the beginning, there's different regulation that's kind of coming down, and you were saying even, hey, we don't even want to participate in that market, right? And as like an American that's coming and saying, man, there's these really innovative companies that could be providing value, that could be a part of the network in the United States, and there's money that could be driven there, there's jobs that could be driven there, there's people that are saying, hey, we're not even going to participate, right? As someone kind of looking in, and seeing what's going on, it's like, what's your perspective on what you've seen in the last couple of days?
Yeah, it's like, looks like everything is on fire. I understand why regulators are doing that. I fully agree. We need regulation. Yeah, there are of course different approaches. So I know how the regulators are processing with people who come to the regulator in United Arab Emirates. Yeah, I was personally speaking months ago with in Dubai with a regulator, and they're very open. They want to help you. So they say, okay, we are ready to take you on the hand and guide you through our framework. And if you can suggest an approval, we can review it and potentially apply as well. So we're flexible. We want innovation in our country. And this is different from our point of view now to US. So Coinbase founder said that it's killing the innovation in US, actually. Just kind of attacking other companies and try to kind of fix the regulation by force, I would say.
Yeah.
I would appreciate if the regulators would come with more agile approach, but I fully understand why. Because FTX happened, they were regulated and something went wrong, and it can happen because, again, if something can fail, it will fail. And in these terms, we had humans who were too greedy and gambled with the money of the users who gave them. I think it will be different next year. So you have anyway the president elections, and I hope this guy, the Mr. from Florida, with a promise to support the crypto space, would win. And then anyway, we will see a change in the regulator structures in the seats. They did normally they exchange the seats, right? They said that every president set own people or trusted people into the seats. Also in the security commission, commodity commission. Yeah. But once again, it's we as well. We have kind of also fear in terms of, okay, we are blocking US for like what means it's this. We have a non-profit organization which serve the client to 1inch network. Yeah, and it blocks US because it's fully unclear what is next. So you don't know what can happen, especially also for DeFi product. Of course, you have kind of self-custody approach, trustless. No, there are no admins for the protocol. Every user can exchange without like KYC. It is how it is, yeah. And we need to find a way to work also with the regulation itself. And there are good approaches in Switzerland. You can exchange actually without KYC, utility to utility token. It's allowed without limits. It's possible because they understand. Okay, if it's really a utility, and there's potentially also kind of AML screening, like in terms of TRM labs used and some other ML services which can just prevent hackers to exchange tokens. Yeah, at least at the client level. Yeah, it helps already, and in some countries it works already, like in Switzerland.
Yeah, and I mean, you can see the consumers want it. I mean, even in the US, millions and millions of wallets, tens of millions, not 100 million wallets that are out there that have been created. And people want to utilize that for whether it's collateral to buy a house and turn that into something physical, whether they want to buy a car, and but they don't want to have to sell off an asset, right? And then you have to pay a bunch of taxes, and then it's kind of going back and forth. And so it's just very interesting to see that you guys have still had to kind of pull off, because you're saying it's just so unclear. We don't know what's next, right? And that's not that's not that's not fostering innovation, right?
Yes,
It seems like someone else coming in with their hands open saying, hey, we're going to help you guys through this because there's so much innovation. The people want it, the consumers want it, and they want to grow.
Last time I was in United Arab Emirates, I met one of the sheikhs who are responsible for getting more talented people into the country. He was sitting and saying, Sergey, if you need any help, just come. We will make everything possible that you are fully comfortable here to build a nice startup, build a nice company, to create working places, and yeah, kind of improve the country itself. Yeah.
Right. All right, man. Well, I appreciate you stopping by here. I think we did 30 minutes. I mean, tell everyone where they can find you and 1inch and everything else.
So on Twitter, you can find me under D6, DEACIX, and if I don't answer to direct messages, I'm very, very sorry. We are very, very busy by building a lot of things right now, like cleaning a little bit until end of this year, improving everything what we are doing. Yeah, just you can write on Twitter. I would appreciate it.
All right, find Sergey on Twitter. Thank you, everyone, for listening, and we'll talk to you next time. Appreciate it.